Welcome to Shortview Trading. My name is Chris Walling. I'm the CEO and Chief Market Strategist of Longview Economics and Shortview Trading. And this is your morning market hit for Monday, 4th of November. What matters for markets if you want to trade equity indices on a 1 to 2 week basis? You want to move either long or short equity index futures like the S&P500 future, the NASDAQ or the FTSE or the DAX. What factors should you think about? What should you look at as you go about making that decision? That's what we're going to dig into in this video. And so the first thing you want to think about is what's been driving the market. Why is it where it is? What's behind the recent moves? What's the explanation? Because if you listen to the mainstream media, you'd be fairly confident it was the Trump trade. You can see in this chart the betting odds that they've improved dramatically over the course of October, at least up until this weekend. And that has been the narrative. The Trump trade is driving bond yields higher. The Trump trade is leading to a stronger dollar, and the Trump trade's been driving the equity market up. But of course, if you look at the actual data, it's not that clear. The S&P 500 since the end of September is flat. The NASDAQ 100 since the end of September is flat. And even if we look at more cyclically sensitive, domestically focused equity market indices, like the S&P 400 and the S&P 600, which are the mid caps and the small caps of the US, they're both flat. So in other words, the equity market hasn't really been responding at all. It's been struggling. It's been losing its momentum. And indeed, even if you look at bond yields, there's an alternative narrative. Of course, if Trump's elected, if he gets control of Congress and the Senate, both House of Representatives and the Senate, then he's going to find it much easier to put through another fiscal stimulus package. And that is, of course, good for the cyclical side of the economy, at least over the next year or two. So no wonder bond yields are backing up. But there is, as I say, an alternative narrative. And in fact, look at our model here of the relative strength of equities versus bonds in the US on a medium-term, multi-month basis. Just look back to early August. Equities were oversold. After that pullback, bonds were overbought. The price had been rallying. The yield was low. And we've had a reversal of that trade over the last couple of months. It's been basically an asset allocation switch, such that we're now at the other end of that. Bond yields have backed up. Prices have sold off, bonds are oversold, and equities are now overbought or have been up until recently. So there's an alternative narrative to what's been going on in the bond market, and it's not clear that equities really are driving a Trump trade. And as always, it's often the case you've got to look at the models to get a real sense of what's going on. How is liquidity doing? What is market positioning up to? And where are we in terms of risk appetite and fear and greed and our sell-off indicator and other models like that? This is the crux of understanding markets, and it's how they behave in response to news flow when you're aware of these factors that are really important. If a market's very greedy and it gets good news flow and then sells off, that's a pretty bearish sign. Equally, if a market's fearfully priced with high volatility and it gets good news and still sells off, that's troubling. So it's contextualizing all these factors, understanding the underlying positioning, the underlying fear and greed, the underlying technical condition of the market that really matters. And that's what we're focused on. So this is not to suggest the election doesn't matter. It does. It will drive policy changes and it will matter on a multi-month basis. But just as important, if not more important, is how are the models and how's the market position coming into the election this Tuesday. So it's in that vein that we've been watching the loss of momentum in equity markets over the course of the last few weeks. As I said, S&P 500 is flat over 5 or 6 weeks. Momentum at an index, sector and single stock level has been deteriorating over recent weeks over the course of October. And indeed, you can also see this in the NASDAQ 100 and the mega cap tech stocks. As mentioned, the NASDAQ 100 flat really over the course of recent months, certainly over the last 5 or 6 weeks. And some of the mega cap tech stocks struggling within that. Microsoft, as you can see, struggling at its 200-day moving average. Apple and Amazon both haven't taken out recent highs. They've gone nowhere over the course of recent months. And then, of course, even Nvidia, which tried to push out to new highs a few days ago, a couple of weeks ago, but looks like it's struggling to hold on to those gains and those new highs. So Momentum is rolling in this market. It's interesting as we come into this election, so much uncertainty associated with it, and we'll be watching closely and updating our models each and every business day and our thoughts on the market each and every business day and publishing them in the daily risk appetite gauge. So if you want to hear more from us, you want to take a trial of that product, please click on the link below. We'll send you the product for free for a bunch of trading sessions, or equally if you're a subscriber, should be in your inbox around 9 AM London time each and every business day. So that was your morning market hit for Monday, 4th of November. Thank you for listening. If you like these videos, please share and subscribe on social media to our YouTube channel or follow us on LinkedIn, Facebook, and or Twitter. Thank you for listening. Stay safe. Trade well.